was going to say good morning, but I'm sure for some it's not a very good morning. It's pretty we're joking in the room there, talking to everybody on YouTube in the green room saying about it. It's a instead of GM, it's BM, a bad morning, or Dan said bloody morning. And it's nasty, but it's exactly what we wanted to happen here this morning. A continuation of last week's move lower, continuing the vertical drop, becoming climactic into an area of support. And the ideal scenario is it just keeps going down for a bit more this morning, maybe into the 10 o'clock reversal period. So I've got this area marked off here, and it's always an area. And just forget these exact points that you see people coming up with Fibonacci overlap with this Fibonacci and that Fibonacci and all that hocus pocus stuff. You just simply look to the left there. So, this pivot where it's at right now, and this bar isn't even done. You can see there's a minute left in there, but this type of a wide range bar on a 5-minute chart, as you can see, breaking like that, sometimes it sets up just a very short-term little bounce as things just the range expansion to the downside. Again, that bar is not done. The next bar could be bigger, of course. So coming down into this area, there's going to be buyers down here. It's collapsing. I'd love to see it break down below the greater than 100% retracement concept. And so looking at the weekly chart there, you're seeing how that lines up with that pivot, which is like 4,200 on the S&Ps. And okay, it's way down here, breaking below those lows. So, that's a whole number. It may just stop here, may just go down under these lows here. It's a very long way down from where the move started. Another idea, concept, word, which I kind of despise because I know how it can suck you into things, is being oversold. And I say, was it oversold here? Was it oversold here? Is it oversold enough now? Will it be oversold enough down here? So indicators are useless. Just follow bar by bar, look to the left. There's just nothing to stop it. Once it broke here, there's nothing to stop it from going down until it gets here. So all of those fib lines, VWAPs, Gann lines, square of 9, Elliott wave. I hope this reinforces that this is useless, misleading information. And it's just so simple to look to the left for support and resistance. Now, it doesn't mean it's going to hold here. A lot of times it goes through it, right? The greater than 100%. We'll see if that happens. So it's just, we look to the left, we see what's here, knowing that it may break through it. And so from the daily chart perspective, swing trading, you got nothing to do here, right? But wait to see if today turns into a green bar by some chance. I think it's unlikely. And we really wouldn't want that. What we want to see is it hang down here, something like what it did here. So it could get stabilization. We get, things beginning to hold in this area. But what we want to see is some sideways movement. Now, being so vertical as it is, it could be a V, and it pops up a bit. And so we'll see what happens. But right now, we're just looking for this to try and hold this area, and we'll see if it breaks down through it or not. Internals were at extremes on Friday, Fabiola, and we'll see where they end today, but you can see where they were. And historically, breadth goes down to the area of minus 300. The market is going to bounce. Now, I say that as if you could bet your life on it. We don't do that, but every occurrence that has happened historically, and I've been following this for a few decades, the market bounces. So that's a pretty good batting average of the probabilities of a bounce. Where it bounces from, that's another story. So, coming down here to this support and gapping down there, creating a void within this collapse is a pretty fantastic scenario for a bounce. Now, the ranges are going to be big and wide and erratic. So it's not that it's going to be easy. Right. A pattern will form, so it'll form on the intraday charts and it'll form on the daily charts, but the bottoming pattern on the daily chart is going to take time because there's a tremendous amount of fear now as to about what happened. And of course, uncertainty. And, this is a lot of people are in pain here. And that being the case, you're going to have many individuals that are just going to be looking to get their money back, on any bounce. So coming down here, you see where the futures are at here. They're still going down. This is a 10% correction, and it's into this support. And this is something that we talked about in the letter at the beginning of the year, or the end of last year. We were expecting this. Not that we're expecting it to happen so abruptly and quickly, but the probability was that was in the cards. And now here it is. And it's happened in an ideal scenario. Another thing I wanted to point out that I forgot to point out in the newsletter over the weekend, that these bands that I've been utilizing for decades as well, because market environments change and the static levels of 0.8 and 1.2 don't always provide us with extremes. So these bands, you see how they're now pointing down? All last year, they were pointing up. So these bands are adjusting for a changing market environment where sentiment becomes more bearish. So the levels that we look at, the bands adjust for that. Now, I imagine at the open, and it'll be some extremes where the NYSE tick might be at a minus 2,000. We may see put call ratios in the area of 1.5 or higher. What we want to see intraday, if you track the total put call ratio, is it moving to 1.3 or 1.5, and you have an NYSE tick well below minus 1,000. And as an intraday trading market internal, that is a good signal of a short-term turn intraday. Okay. All right. So we see the internals at extreme. They can become more extreme. Breadth is down historically at a level where the market bounces, and the collapse that's going on here into this support. Buyers may show up within the first 5 minutes. We'll see. We'll see how it plays out. The ideal scenario, as I said, is coming down into this bottom of this level here, which is almost at, and if I have my wishes, it'll break down below it. And that's where the turn will occur. And then we'll look for some type of bottoming pattern down here. Looking at SPY, you can see has to follow, but let's see where it is for the gap. 431, right in the middle here. So let's see if it just keeps going down. The trend is down on the 5. There's nothing to stop it yet. It's getting close. We'll see if it keeps going through. Well, 430, should be, it's a whole number, DB puck. So 430 whole number, that is something to consider. It's lined up with an area of congestion over there. And as I've already said, ideally it goes down through it. On the daily, not much resistance when it turns. A correct thing, and that's the whole idea of a momentum move. And a vertical move, that it creates this void up above. There isn't much to stop it. Now you can see intraday, there's these points there that intraday traders will use as reference points, but this is going to be gapping down. Look where it closed on Friday, 438. It's at 431. So the gap down as well is going to create a void of absolutely nothingness between Friday's close and where it's going to open. Now we see the intraday data, and it's a 437 area. You can see right there, which is relatively close to the gap fill. Where it might go up to, and why we always look for, hey, what's to the left there, and that congestion where prices might stop from a gap down bounce. All right, SPX. This is kind of amazing. Of course, this is going to be gapping down here, but there's premium. And I as far down as many strikes as I could. Let me just see if there are any more there. No, 40.75 is the lowest I can look at. Now look where that is. 40.75 is down here. It's right now, it's 85 cents by a dollar. Usually we go far enough away where it's like 45 cents by 60 cents, all the way down here. All right, I'm going to use a term, just take it, as a grain of salt. Free money. It ain't going down there today. It would be incredible. I say that because it just cannot believe that it would be coming all the way down here to clear, this pivot and just keep going. So, you could wait for some 5-minute stabilization, but maybe if it does keep going, there may be strikes below, but this is a significant support level. And let's just see percentage-wise how much, what that is from this high point. So that's about 15%, give or take. 40.75. Yeah, it's about a little less than 15%. That would be a tremendous move in a short amount of time. So again, it's about probabilities. And even if it goes down there, there's such a significant support. There's going to be buyers there. All right, let's keep going. Right. Tech was the weaker. This is already down about 15%. It's down here. This should, right? We'll watch Apple, which I assume is down, has to be, right? Anything that's not down. Apple's at 159 and 80 cents. It is on some support here. It might go a little bit lower. And I don't have the chart up here. I'm just looking on another charting platform. Might go down to a bit lower, maybe 157 or so. We'll see. So that'll be something to keep an eye on. We see a little stabilization here already, bottoming tail bar on the 15. All right, so a little buying, picking up, still in a downtrend, but notice the momentum is slowing down. Look here. Look. Stable, down, stable. The distance between the lows are getting closer together. One second. All right. All right.
1 second.
1 second, everybody.
Yeah, hey folks. Yeah, good morning, Greg. We'll be back in a second, but I'll go ahead and take it here. We don't have that many earnings or gaps. I mean, this is a type of day when you get excessive gaps. I just sent a text alert out. We just got to cancel all short setups because they're gapping under and they're going to be crazy. There's no good entries right now. So I did hear Greg say in his intro remarks that for the swing trader, there's nothing to do. And that's for new trades. And that's totally correct. We just got to, wait for the bounce. But we were talking a lot on last Thursday and Friday about what the setup of new shorts would be, because the market was over, down. Greg said, don't use that word, oversold, but they were down a lot. Thursday, even Wednesday, Thursday, Friday. And so we don't short things for swing trades that are momentum moves far from the 20. But let me show you the type of trade that I'm going to show you all the trades that we gave in our weekend letter. Pfizer was one, but you see how this is a continuation pattern in a downtrend? In fact, this is a great one to put an MT live on Wednesday, because that's the subject, trading continuation patterns. And so you want to short things that have a tighter reference of resistance with a price void. So this was a great new setup, but the problem is, look at the gap. Gapping a couple dollars under it, or $2. Here's another one, Ring. Ring was a breakdown. It went sideways here on support. And then Thursday is a continuation bar. So that's actually another.
Sorry about that, everybody. I had to take that call. So, I mean, it's pretty much the same everywhere. What's down at support? The Russell isn't. That just looks ominous. Breaking down. We'll see where that holds or not. But you can see the breakdown that's occurred here. I've got this little shelf right there to see if it does hold or not. There's a little congestion right there, but everything's looking pretty nasty. Bitcoin is on its way. All right, we talked about 30,000 over the last couple of weeks. It looks like it's got to go there. Oh, I didn't see Dan talking.
Yeah, and you don't see my.
Okay, Dan's got his charts up. Anyway, it's ugly, and it's exactly what we wanted to happen here this morning, and we'll see how it all plays out. All yours, Dan.
Yeah, no, you can take it, because I was just actually giving them a little lesson here on why we're doing nothing here for new short positions. And I was just showing them the type. I was actually showing them every single short trade that we put in the weekend letter and why we did them, comparing this to the fluid bars down. So see, we got a continuation bar on Stone. I mentioned Pfizer. I was just mentioning Ring when you came on, and MT Live this Wednesday's continuation patterns. And we can actually take any chart, anything, and we can show you an example of whatever topic we teach, whether it's a setup or a red bar ignored or moving averages or a gap. What else? Piton was a bear 1, 2, 3 continuation, but I canceled that one also, just because they're starting to squawk a little bit about maybe buying it out. So I don't want to, even if it does trigger, I don't want to get caught in that. CMCSA is actually, it was gapping up today. But, you know, sloppy, but at least we had a continuation bar on Thursday, sell set up on the weekly. Musa, and there's a bear, 1, 2, 3. But let's say hypothetically this opens flat. And then it takes, you know, it cleanly triggers after 5 minutes. I still am very skeptical of taking it for the reasons that we've been talking about. Because if the mother, you know, other than a day trade, because if the mothership is going to reverse, you know, the all tide going up or down, that's why we trade with the broader markets. And then Pfizer I mentioned. So see, those were all fantastic little new short setups, but again, I canceled them on. On longs, we gave this CLVT, but it has to get over Friday's high, which now with the gap down seems highly unlikely. And we had a WIMI, has to get over Friday's high, but same, that's another continuation bar, see? So many continuation bars here. Yeah, we have gold in the ETF trader. Oh, Greg, we should, on our back half of XLK, and what do you
Cover it 5-minute high.
all right. All right, so give me a second on that. Yeah, so here, this was another, this is when we gave the ETF trader, after the sell setup here, we did it under the green bar, because that's a bearish, well, it's a kind of a minor, a bear 1, 2, 3 continuation, but it was a green bar ignored continuation. So that triggered on Tuesday. Give me 1 second. Yeah, those are our only positions actually. So we're very light. XLK short and GLD long in the ETF letter, and we only have one open position in the weekly options trader, which is that wide $10 wide put spread. We have the 430s for Friday, 430, 420. All right, so that's it. We had a couple of shorts last week, and we were taking our money into weakness. This is one that we still have. Hertz, still have a third lot short. So we'll keep an eye on that. All right. Well, no, we wouldn't do it now, Harry. Let's just wait. But yeah, so we got problem children. We got, well, Apple, we did a earnings trade. We did the 150s, so way far out of the money. Earnings are Thursday. I think Microsoft and Tesla are this week also. Tesla getting whacked here. Some of the EV stocks getting hurt right to the 900. Look at this SARC. And there was an article in the journal saying lithium is expensive, so that's what you need to make batteries. SARC here, I don't know what they do, but this is a recent, very successful IPO. There's another continuation pattern right there, folks. Look at Thursday's bar. Continuation. It's a short ARC fund. Wow, I forgot. You're right. I totally forgot about that. Yeah, ARC, but S, short ARC. Wow. Look at jets here getting whacked. Article about cruise ships having more trouble. That's just a total stay away for now. OPTN. I don't know. There's no great pattern, Michael, and for me to be long, I'm not going to be in a rush to do anything. Actually, you know, we should be keep what we should scan today, Greg, other than the regular, is retail departments. You know, the more the little guys. Well, they aren't so little, but I mean, as opposed to a Target or Costco buyout offer for KSS, and there's been ramblings about that. But look at Macy's. So Macy's is up. No great pattern right now, but Macy's, Nordstrom are up. I'm just guessing. It's on the back of the KSS news. Snap got a downgrade. That is an ugly downtrend. Anything green is relative strength. EXC, there's another continuation bar of the Dow 30. Procter and Gamble is the only green one, up over $1. And then Verizon just 18 cents. No pattern there, but Procter and Gamble's, it's not bad. Not bad at all. Made a lower low and snapped right back. That's strength. I'll put that on the list. Yeah, so jets are a stay away. UNP. I was just looking at this because there's an article in the journal about just the math. You know, they're taking huge losses because of, you know, the trains going through LA